Hey, how is everybody doing? Hope you guys are having a great weekend. Hope you guys had a great week, profitable week, and I hope that this week is also profitable as well. I'm gonna be going over my trades from the previous week and letting you guys know why I took those trades, win or loss. Now, my first trade, right? We have here GBPJPY sells entry at 184.130. Right? So it was about a 100 pip move that we were able to catch if you were here on the VIP, 103, and you could have gotten more if you had stops to break even. It would have never hit. Now we had here and over here we had a bullish rally previously. So after I saw a retracement over here, after a long rally, right? Always after a long always after a rally there has to be some type of retracement, right? It may not always be the case, right? But here, for instance, we could see retracement. We have rally over here, and then we have this retracement over here, this 100 pip range. We were able to capitalize off of this range. We also have a trend line coming right from the bottom, so we see breakout of diagonal support. So also coincides that at this area, it's not just a diagonal support that we're breaking out of, but we're also respecting a 4-hour and a daily level of resistance. Now, is this resistance level valid? Yes, indeed it is. We do have at this level multiple rejections, right? We have rejection here, we have rejection there, breakout. So we have a lot of valid reactions that tell us that this is a respectable level, and we could possibly see price retrace at this level. Stop loss was also very valid, which guys, if you guys don't know how I determine whether a trade is valid or not, I also take stop losses into consideration. If I see that that price has a higher possibility of hitting 30 to 40 to 50 pips, against me, then I'm most likely not going to take the trade until I see that it has higher probabilities of respecting 20 pips, 15 pips. In this case, it was 20 pips, keeping my stops right above previous highs and previous wicks right over here. And as you can see, if you look to the left as well, this is a very valid level where we see price respect this level, this area right here, this 20 pip area. We also see wick fill on the 4-hour time frame here. We see not the previous candle, the second to previous candle from my entry, right? We have this long wick that we could fill and retrace. Now, what else do we have here? We also have correlation between the 15-minute, 30-minute, 1-hour, 4-hour time frames as well with this trend line. So I had three confluences, actually 6 confluences in this case. This was my first trade, guys, 100 pip move. Now, if you were to want to take the buys, you could capitalize off of the buys down here at the bottom of this range at 183 to possibly even catch the bigger move. Now, remember, guys, this was a short-term trade, not a long-term trade. On the long-term side, you could see that bulls win this battle, right? We have bullish rally, then we have a flag pattern, bullish flag pattern, and then we see breakout out of this channel over here to the upside. So you could have capitalized off of 300 pips. Now, where would your opportunities be? Well, you could get your first entry right over here. Then you can capitalize off of your second entry or a re-entry, or if you couldn't get in the first time, your second opportunity would be here. And then you have your third opportunity to get into this trade right at the breakout of resistance. So you have 3 chances to get in. We didn't end up capitalizing off of it. We took the trade, we took the short-term wins, and then we called it a day. So my next trade is XAU USD sells, entry at 2033, called 1 day after. So let's go take a look at XAU USD. For those that don't know, gold. This is the second trade, guys, gold. Now, guys, this trade may seem a little similar to GBPJPY. As you guys can see, we have our trend lines. I'm huge on trend lines, love my trend lines. We also have a channeling to the downside, and we can sort of see this bullish flag pattern again, right? But I did not execute based off the bullish flag pattern. The reason why I took this trade was real simple. It was a 1 hour breakout to the downside. We're selling at the top of the range. Again, you want to buy at the bottom, sell at the top. Real simple. So it coincided with the area where price was breaking out of that diagonal support. I also saw that we were respecting that 2035 area, which is my daily level of resistance for me. And then we were also channeling to the downside. So there was high probabilities that price was going to possibly go to the middle of this range. Let's see how many pips it is. About 100 pip range, right? So we can capitalize off of this 100 pip range, and we were able to secure profits. TP1 ended up hitting. Nice little 35 pip move. Dubs are dubs. So this is our third trade, right? NAS sells, entry at 6641.5. This one was a stop loss. Stop loss did hit, but we had tight stop loss, keeping our stops at around 30 pips. Well, 300 pips, which would be like 30 points. So on average, NASDAQ moves about 250 pips to 350 pips per 15 minutes, 30-minute candles. So it is a nice stop loss. It is valid. I was shorting while we were on an uptrend, so it was a risky trade. Probably one of the most riskiest trades I took this week, and overall I was on the wrong side of the trend. You know, I lost this trade simply. I was counter trend trading, right? And we also sold at this minor level of resistance. It wasn't too valid, and again, minor level, so the probabilities of my trading stop loss were much higher, hence why it was a risky trade. Sold at a minor level of resistance. Now, also I was anticipating rejection right around this area, this minor level resistance. I was anticipating, that's why I kept my stops right above these previous highs. So, you know, guys, you don't want to anticipate in the markets. You don't want to be a reactive person. You want to have your confluences in your favor. You want to make sure that your trade is, you know, going based off your trading plan. Make sure that you have objectives with every trade and that every trade has a goal, right? In this case, we lost our trade. We didn't have much confluences in our favor. I was taking this trade more based out of impulse and anticipating, and you know, price. I was just on the wrong side of the markets. Real simple. So, what I would recommend to avoid doing to next time not lose, you know, and this isn't advice that I'm giving you guys. This is just advice for myself as well. I use these recordings to go over my trades and every week and review my trades, review how I trade, and it's just my way. It's my form of being better. So don't take this personal, guys. If you guys can use it to your advantage, you know, do so. Learn from my mistakes so you don't have to lose the same way that I lost, right? If I can teach you guys how to not lose through my losses, you know, it's something I didn't really have in the beginning of my trading career. I had to lose on my own to be able to learn, and it's really hard when you don't know what you're doing, or you know, you don't know why you're trading certain trades, to learn off these losses, right? So next time we see bullish impulse, right, to the upside, we see that we're trending to the upside. The trend is your friend. This is a minor level, and next time, you know, just wait for candle closures. In this case, I did wait for a candle closure, but not off the higher time frames. I was looking more at the shorter time frames, and you know, next time I just can't anticipate. Gotta wait for my candlestick confirmations. I have to make sure that we're respecting major levels, not just minor levels, and you know, be on the right side of the trend. And if I am going to counter trend trade, have more confluences to my favor. Our next trade is January 11, gold buys, entry at 2032. This one I got obliterated, right? Good thing I had my stop loss at 30 pips, but we lost only 30 pips. Good thing it wasn't more. Ended up seeing a 200 pip sell off. Now this one I was in too early. Again, I was anticipating breakout because I saw price broke out over here, right? We see this wick this wick breaking out of this trend line. This trend line comes from 4 hour and also valid in the daily. We have multiple touches making this trend line pretty valid, and we sort of respected this daily level of support. Although we did break out of it quite a few times, as you can see over here, we see trading right underneath it, and then we see breakout over here. But um, to the downside, of course, respecting this trend line and this breaking out of this daily level of support. Now, I did not wait for a candle closure, so that was one of my problems that I did wrong. Guys, candle closures are key, right? If you guys don't wait for candle closures, either your trades, you'll see more losses, and you'll just be more impatient. The more you wait for candle closures, you'll the more patient you'll be next time. And if you can get yourself into that rhythm where you can constantly wait for candle closures to set up, wait for it to be in your favor and be okay with missing out on certain trades, then promise you, through my experience, your trading will improve and you'll see less losses. Now in this case, we respected this trend line. We saw 300 pip sell off, and I was in 4 hours. I was 4 hours in too early. Literally one 4 hour candle in too early. As you can see, the next 4 hour candle, we see price reverse, retrace this sell off that I had, and then we start to see breakout 8 hours later. So 8 hours in this trade too early. I saw a breakout of this trend line. I couldn't wait for a candle closure, and price reversed, hitting my stop loss. Luckily, it was only 30 pips, but price ended up having that rally that I was expecting and break out of this diagonal level of resistance. And that is all, guys. Those were all the trades that I took. So as you can see, we took 1, 2, 3, 4 trades. 4 trades were taken this previous week. We didn't overtrade, we didn't over leverage. Guys, don't miss out. Hope you guys are enjoying this Telegram. If you guys have any questions, feel free to DM me at John Paul Trades or DM any one of us. And guys, definitely please react to this message. Let me know what you guys would like to see more out of, trade ideas, more trades, what type of pairs do you guys trade, what type of sessions do you guys trade, what is it you guys enjoy. I want to make this as interactive as possible, and I want you guys to benefit the most out of this community. That being said, let's have a great trading week. Let's kill it this week, and let's have more wins, less losses, more pips to catch, and less pips to lose. Peace out, guys. Happy Sunday.